Okay. Okay. Hold up, gotta back my crack. Oh, let's go. It's gonna be a short video today. I got church tomorrow, but I just watched Daily Bias. And tomorrow we'll watch Daily Bias Part 3, because I probably don't have time on then either. And then we'll watch, on Monday, we'll watch Take Profits and Stop Losses. And just so on.
Okay, so we're going to do something kind of fun today. We're going to make the Daily Bias boot camp video like right now on Zoom. So this is with my Discord before pre-market. Market opens in around 17 minutes. We're going to make our Daily Bias video, like explaining my daily bias on these pairs. So we're getting recorded on here, and this is also live, like market analysis. And then you'll also see, and then we can also like go over how the daily bias played out with the live trade, or sorry, the trade recap afterwards. So I thought this was a fun idea. Let's get into it because we don't have much time. Okay, so I know I didn't have the chart in the last video. I'm very sorry. I messed up. All right. I know. I don't know how it happened. Okay, but anyways, you guys heard me explaining it. We'll explain it one more time with the charts this time. Okay, so what I like to do for daily bias is we start off on the weekly time frame, figure out, okay, where's our overall direction, right? We can even use a line chart. Okay, the S&P, it's been moving up. This is, like, honestly, very surprising to me. The fact that we're breaking structure back to the upside, very, very surprising to me. The fact that we're about to break structure on the monthly time frame to the upside, okay, like, this has to be the next, like, I'm not convinced that the S&P, I'm not convinced whatsoever that the S&P 500 is bullish. So my next draw on liquidity is up here. Okay, we also have a draw right here. Okay, but we broke monthly structure to the upside. Unless today closes below this low, this high, and I don't think that's going to happen. We have news today that comes out.
Whoa, what's that? I just built a budgeting app in Base 44. Guys, Nina just built.
In 30 minutes in a market open. That won't do shit though. A candle's not going to come. No candle on the S&P is going to go down to 3% in a day with no like major high impact news. It's just not going to happen. So I'm very, I'm trying to figure out what the market makers are doing with this because I've read the fundamentals. The fundamentals doesn't look good. Anyways, we're getting off track. We're getting off track from the daily bias. Anyways. We look at the weekly time frame, we see the overall direction. Overall direction, bullish. Then we head over to the daily time frame, right? Because we are trying to base our trades based off of daily candles. Okay, so if we can understand the daily market structure, if we can understand the daily trend, then we'll know what our daily bias is, where we would like ideally want to take a trade, right? If we're bullish, but we're in a retracement on the daily, are we going to try and take a trade off a retracement, or would we want to take the extension because the extension is always way larger and way bigger than the retracement, right? It's higher highs and higher lows when in an uptrend, right? The highs go so much farther than these little retracements down. So ideally, you're trying to catch longs in a uptrend, right? So that's literally all we do. Okay, we go to the daily time frame. We broke structure to the downside. Right here, and this is why I took shorts yesterday, because we swept daily liquidity up here, although, we'll get into this later, we didn't have confirmation on lower time frames, and that's where I fucked up. Oops. And that's where I fucked up. Okay, but we'll get into that later. But anyways, we go into the daily time frame, figure out our daily bias. We just recently closed back above here on the daily time frame. We broke structure back to the upside on the daily. So we're bullish again. on the S&P 500. And as much as and that's what I was doing yesterday, as much as I would like to force my bias and like force my bias on the market and say, oh, well, like, I think like the fundamentals are saying, like, we can't do that. So we have to play off of what our daily bias is saying. We can't just do what we can't take a trade based off of what we want market to do. We have to take a trade based off of what market gives us. Okay, and right now it's telling us bullish market structure. Let's go over to real talk. Anyways, all right. So, all right. I don't know. I have no explanation for that. Anyways, okay. So, I'm sorry. Anyways, we broke structure to the downside. Forgot that was there. Anyways, we broke structure to the downside on the daily time frame on GU. So what are we right now? We're bearish. Weekly, we're bullish. Right, we have this. This is technically a weekly order block. Why? We swept this liquidity. Boom, rally higher. However, on the daily, where we're trying to guess where market's going to go, we're still bearish. So until we flip bullish on the daily, then I'll be able to flip bullish and continue on the weekly trend, right? The weekly just gives us an overview. And this is when we can get into the smaller time frames. Okay, so yes, we are rallying higher on the daily, right? We are retracing on the daily, which probably means we broke structure on the 4 hour. But this is when it's prime time to try and catch a short. And this is where we can use our building blocks. Fair value gap. What is this? This is the order block, right? What is this? Boom, sweep of liquidity, boom, big break of structure to the downside. This looks like a great trade to take if we can get up in here and show me some sort of bearish confirmation off of this, right? On like the 15-minute. If we get a break of structure on the 15-minute, I'm ready to go. And I'm ready to target even lower. I'm ready to target this is like an order block. Even though it already slightly got tapped into, I wouldn't be surprised if we pushed even further down in there to collect more orders. Because look at this. Boom. Big rip to the downside. Big liquidity sweep down, filling this imbalance, and then big rally right after that. Okay, so again, what's our daily time frame telling us? Bearish. So what are we looking for? What are we trying to find setups on these higher time frames first, right? Boom, imbalance, order block. Then what do? We scale down even lower. And we say, okay, what are we looking for now? We're looking for liquidity sweeps on the 15-minute. We're looking for break of structure on the 15-minute, and then an order block entry on the 15-minute, scale down to the 5-minute, and then get a break of structure, and then that's our sniper entry. We go from finding the daily trend.
If you get stuck on a melody, or if you just feel like you can't get a song started, Output's co-producer.
Downtrend, we're bearish. To finding a building block area of high confluence within our bias, bearish fair value gap, bearish order block, to then scaling lower to finding those same building block entries, but on our lower time frame, because we're in this whole price zone is a high confluence price zone to go short on the 4 hour. So how can we get the sniper fucking entry using the shit that we just learned? Okay, we do that by scaling into a lower time frame and using more confluences. Again, right, we're within a building block, and then we're using more building blocks on a lower time frame so we can get that good entry, so we can target high time frame take profits. And after this daily bias series, we'll go into setting take profits, and then we'll go into setting stop losses, because I get a lot of questions on that, and we'll get to it. Okay, so boom, we have the order block right here. Okay, and then we have, let me get rid of this because this was just showing the break of structure, and then we have this imbalance, which has pretty much filled all the way. Let's do the same thing on gold now. Gold, weekly, what is it? Bearish, cool. Gold, daily, what is it? Bearish, awesome. What are we doing right now? We're retracing on the daily, even better. What are our retracement tools? Fair value gap, equilibrium, okay? How can we find equilibrium? Boom. Perfect, we're not yet in a discount. What else do we see? fair value gap right here within a discount. See, we're putting all this shit together now. Scale, and then look what I just did. Scale down into a lower time frame. Boom. Imbalance within here. Liquidity resting above these highs. What is market likely going to do? Where is market likely going to draw towards? Probably going to draw towards these highs, probably going to fill this imbalance. And then what do we do when these price points get hit? Scale down to an even lower time frame. Okay. Wait for this liquidity to get swept. Wait for this imbalance to get filled. Within here, okay, and then we use our building blocks on a lower time frame. Liquidity sweep, break of structure on the 15-minute. And then we're taking an hourly and a 4-hour type of trade, but we're getting good fucking entries. I'm not going to trade GJ just because it's been trading pretty sloppily. But that's how you find daily bias. And you guys will see the trade that we end up taking today. Market opens in like 7 minutes. You guys will see the trade that we end up taking today. And it will be off of one of these daily biases. I'm bearish bias on gold. Bearish bias on GU. Ideally, we find a short.
Low key. I'm gonna just watch this video too. Why not?
Yo, what's good, guys? Welcome to Daily Bias Part 3, where we'll go over charts again. This is kind of just going to be like a recap sort of thing. Recapping, like how we find our daily bias, I guess. And we're just going to do a little bit more of what we did yesterday. Okay, so again, what are we trying to figure out? First thing, the reason why I mentioned like the weekly time frame is if we break structure to the downside on the daily, but we're in an uptrend on the weekly, odds are it's going to be a weekly retrace. And that's just something you have to keep in mind, right? And that's something you should keep in mind for every single time frame is whatever the higher time frames hold higher power and are going to cause the market to move in that direction, right? So if we're looking at the weekly and we see break of structure to the downside on the daily like this, right, odds are it's going to be a weekly retrace. So what can we do, right, for something like this? We can use our retracement tools. Okay, so ideally I would have liked the weekly time frame to come into the equilibrium at least. Use our retracement tools. Okay, so ideally I would have liked the weekly time frame to come into the equilibrium at least, right? Or fill this fair value gap. And that's kind of what I was banking on this past week because it was underneath this monthly low. Price did not decide to close underneath the monthly low as I thought it would. Okay, and that's fine, right? I'm completely fine with that. It broke structure to the upside on the monthly. Again, though, economic climate looks awful. So what does that lead me to believe? Well, there's liquidity, again, on the monthly time frame, all the way up here. So where is price likely going to draw towards? Here or here, right? And then cause a reaction off of it.
My bad, my mom keep me, bro.
Don't think we're done. Personally, that's just how I feel. Yeah, I don't know. That's just how I feel. That's just how I feel on it because, dude, the news data is telling us, we still got shit to work out, bro. Like, there are too many people that are still rich and that still have all their money from this COVID shit. And my ideal target, and sorry, this is getting way off track, but this is My ideal target would have been to take out these COVID lows. These lows that were made through COVID, where most people were probably buying. After we were able to take back, after we were able to reclaim all-time highs after this big dump, this was smart money. This was the rich getting richer. Liquidity sweep launch. Okay? All dumb money entered off of all-time highs getting taken out. This is where people got rich, right? From like here up to here, right? That's where people got loaded off of just COVID stocks booming. And then we restructure. To me, this move down hasn't really done anything. Ideally, right? This is a quarterly order block. Why? Because we swept liquidity, moved higher. We didn't come near it. What did we fill with this? We didn't fill like really anything. Maybe we hit equilibrium. But other than that, barely hit equilibrium. I think this thing wants to go lower. Like this is not enough. Like ideally on a high time frame, one tiny wick during 1 week, that's not enough time for smart money to fill their orders. Right? It would make sense for it to take out these COVID lows, fill this order block. And then we liquidate all the people that got rich during COVID. And that's essentially why we have to fix this inflation shit. Because we were handing out money like nobody's fucking business during COVID. We were literally handing out money to like handing out like 2.8K, bro, to people who didn't deserve it and to people who didn't need it. And what were they doing? They were buying stocks. They were investing. You guys remember back in COVID when freaking investor TikTok was going crazy? These are the best stocks to buy with your stimulus check. Dog, are we being for real right now? So, anyways, like, cool. We broke structure the monthly. This is the next draws on liquidity. I still think we're going lower. At least to take out like these two lows. Okay, but anyways, we're getting too caught up here now. Okay, so back to daily buys. I like to look at the weekly to understand, okay, if we get a daily break of structure to the downside and we're in a weekly uptrend, we should understand that, okay, we need to use our retracement tools to figure out where price wants to draw to. Okay, and keep that in mind while we're trading on the daily. Okay, then we get over to the daily and we figure out, okay, what is our daily bias? What is daily market structure? Oh, we got a breaker structure to the upside. Cool, we're looking for buys. And then from there, scale down into the 4 hour. Okay, what is the 4 hour time frame saying? Buys, perfect, even better for long positions. What's the 1 hour saying? Buys, perfect, even better for long positions. And then what do we do when we scale down to the 15 minute? What do we do on the hourly and the 4 hour? We use our building blocks to find those high confluence areas to take a trade. So like here, there's not much, right? There's really not much on this chart. And that's why I didn't trade the S&P on Friday. But like to me, I see liquidity lying underneath these hourly lows, massive imbalance within here, another imbalance underneath here. You could consider this candle to the downside an order block. Why? Because it swept these lows, caused a rally higher, orders were filled. Okay, so these are the things that you want to mark up. And then when price comes into these high confluence areas, then what are we doing on the 15 minute, on the 5 minute? We're mapping out more high confluence areas on the 15 minute. Okay, so right, maybe we come into this imbalance. What's in a confluence, right? This is confluence on the hourly, right? So we have high time frame confluence along with, what are we trying to find now? Low time frame confluence. We have liquidity underneath here. Maybe we see a liquidity sweep, then a breaker structure on the 5 minute. Perfect, long that shit. Right, because the daily, the weekly, 4 hour, the 1 hour, and the 15 minute is giving us confirmation. Right, daily saying bullish, weekly saying bullish, 4 hours saying bullish, 1 hour saying bullish, 15 minute is telling us execute. That's what we need to do. Yeah, you're probably saying, oh, there was a break of structure on the 15-minute right here to the downside. Dog, it's a 1 hour retrace. Remember, keep that in mind. 15-minute break of structure, 1 hour retrace, 1 hour break of structure, 4 hour retrace, 4 hour break of structure, daily retrace, daily break of structure, weekly retrace. Higher time frame holds higher power. So that's why we want to keep our bias on the high time frame, and we can't get skewed by these low time frame bullshit ass moves. Okay, so when you see a 15-minute break of structure, don't be like, oh, are we going bearish? No. Stop getting trapped into the low time frame bias because it's really easy to do that. A lot of you guys see a break of structure on the 1 minute and instantly think the whole chart's going to go down forever. A 1 minute break of structure could very well just be a 5-minute retrace, bro.
Deadline's in 3 hours, but your brain's doing everything but the work. Your brain's like a toddler in a candy store. Every notification is interesting, every thought urgent.
So, with that being said, we used high time frame confluence with low time frame execution to get long-term trades that run pretty far. Okay, and that's our goal, right? Because yes, you might see a break of structure on the 5-minute, and yes, you might get a couple points or a couple pips. But guess what? If it's in the opposite direction, you're getting this small leg versus what you could be getting is the big leg to the upside. Small leg down, big leg to the upside. Which one would you rather take? Would you rather take the retracement or the extension? Me personally, I'm taking the extension every single day. That's your goal every single day, is to be taking the extension. Okay, so when price is not in line with your daily bias, you're screwed. Okay, so boom, right? High time frame, figure out your confluences. 4 hour, there's really not much to go off of. Hour, there's a little bit. Liquidity underneath the hour.
Y'all ever heard of Bega, Bamba Bega, Pantoki, Mamba Bega, Pantoki, Big Ba, Bamba Bega, Pantoki, Bamba Bega, Pantoki.
Really low, imbalance. Liquidity underneath this low, imbalance, Oracle, right? And, if it comes in here and then gives us no reaction, cool, we're not executing. That's the great part about this, right? When I'm in my Zoom call, I map out all these areas and I'm saying, if it comes here and gives us a reaction, cool, we'll execute. Hold on. But if it comes into these areas and doesn't give us a reaction, what do? Like it was never there, because it didn't give us a reaction and it didn't give us the move that we wanted, so we don't care about it anymore. Okay, so that's what you're trying to do. So that's how we do it on the S&P. We'll show an example on GU now. That wasn't. That wasn't. All right, dude. I swear, you're getting this small. That wasn't. All right, dude. I swear, okay, all right. I need to clean these damn charts after Discord Zoom calls. All right, bro. And I need to pull my nose again. Whatever. Anyways, this is a perfect example of the daily and weekly thing. Okay, so we're in a downtrend on the daily, but weekly, we're not quite into the imbalance yet. So what are we trying to do? Right, bearish trend on the daily. So what are we trying to do? We can find confluence on the daily for where price would like to draw towards. Okay, and we can use that as price points as take profits for our very small time frame trades. Because the weekly isn't even into a discount yet. That's like the bare minimum that I look for retracements. Is it even in a discount? Because to me, that's everything that you would want to see. So for this, right, weekly's in an uptrend, daily's in a downtrend. Perfect. We're not taking, ideally, we're taking shorts because the daily's in a downtrend, right? But we understand that this downtrend probably won't come all the way down here. Why? Because the weekly's in an uptrend. So where are we looking for price to draw to? First place would literally just be coming into a discount. Second place, scale down.
Yo, this proves blue like glasses can save anybody. Okay, starting. We're chopped. Now we look crackable. You told me you wouldn't crack me, but wait. But you, if you want to crack me, boy, you did crazy, but just straight up. Like.
This leg here, order block. Why? Boom, big leg down.
Back it up.
Boom, right side. Orders were filled with this move down. What else we have? Like this within here, imbalance, also in a discount.
We'll go pee.
Right? All of these things I'm just marking out on my chart and I'm saying, yeah, if it comes in here, cool, perfect, I'm taking it. Right? What else do we have? We literally just have like liquidity underneath these lows. We go into the hourly. We have liquidity, hourly liquidity here, hourly liquidity here. Go into the daily. Okay, where's the order block that caused this entire move up? The move down that caused this entire move up right here. Cool, maybe price wants to, boom, come up here, right? These were the shorts that we took today. Or sorry, yesterday. We took the shorts off of this. Right, and this is probably something we could have held over the weekend, but I just don't like doing that. Because guess what? What are the odds that this thing ends up turning around? Yes, and this is another thing. Yes, the 4-hour broke structure to the upside, but look at the daily. Look where the daily's at. All the way up in a discount. What happened to the hourly? We broke structure to the downside. That's kind of all I need. So you're probably saying, oh, the 4-hour broke structure to the upside. Well, let's use our heads. Sure, yeah, the 4-hour broke structure to the upside. Maybe I don't want to take a short underneath in a premium, but once it gets up into a discount, once it gets up into, oh, what's this? A 4-hour order block, sweep of liquidity extension down. And I'm seeing reactions on the 15-minute and on the 5-minute, along with price coming into, this was the confluence that we took out off yesterday, along with price coming into an hourly order block here, it makes sense to go short. We're in a discount, we're in a 4-hour order block, we tapped into an hourly order block, and we saw a reaction on the 15 and the 5-minute. And then what does that give us? A daily trade where we can then target daily take profits. First take profit off a 5-minute execution. Boom, discount. Literally could be this low, liquidity. The next draw on liquidity in a downtrend. The next draw on liquidity in a downtrend is just the most recent low. Then we have the discount level. Then we have liquidity here, and then we have the order block here. Keep it freaking simple. That's all we need to do. Okay, that's all we need to do. And then we're still keeping in mind that hey, the weekly we're in an uptrend. Okay, but we're not going to have bearish bias until we break structure back to the upside on the daily, because what's that telling us? That the weekly retracement is over. Daily downtrend, weekly uptrend, right? The daily is breaking structure to the downside. It's a weekly retracement. Once it breaks structure back to the upside, cool. That means the next extension, the next leg up for the weekly is ready to go. Does that make sense?
Yes, sir.
Moving forward. This one's a funny one, actually. I like this one. I need to find that minion picture and just save it. That's actually a very funny picture. Okay, anyways. Gold. What are we looking at? Weekly, downtrend. Okay, where would be confluences for us? Okay, where would price likely want to draw to in a downtrend on the weekly? This is something where it's like downtrend on the weekly, uptrend on the monthly. Keep that in mind. Who really cares, because that's such high time frame? Okay, weekly we're in a downtrend. We're currently within this imbalance, but does that really matter with our daily bias? Not really, right? Weekly's in a downtrend, daily's in a downtrend, cool. What are we looking for? retracement tools. Cool, we're in a discount. Scale down. Oh, look at that. We just filled an imbalance. Scale down to the 1 hour. What's this right here? Hourly order block. Boom, we pushed higher, took out these highs, capitulation lower. Pretty much filled past this already. We're within the hourly order block now. So what would we be waiting for, right? Since we're in a daily discount.
Bearish confirmation.
Sure, the 4 hour broke structure to the upside. But remember, just because the 4 hour broke structure to the upside, what does that mean? Daily retracement. So yeah, we've already retraced on the daily. We're in a discount, so we're looking for reversal points, for price to come down, take out this low, for price to push lower. Where are our draws on liquidity? Where is price likely going to pull towards on the daily now? Daily liquidity. Daily order block. And like literally this whole thing is an imbalance. I'm not going to mark that on the chart because we can just eyeball it. Okay, you can even mark the top of this because this could potentially be an order block as well. Why? Boom, move down, big extension up. Yes, this is like technically the move down before the break of structure to the upside, but this, you can see boom, leg down, big extension up after that. Right, so those are our draws. And what are we waiting for? We're waiting for confirmation on the hourly, on the 15-minute execution points. Do we have a break of structure to the downside on the 15-minute yet? No, we don't. So are we going to execute also 15-minute imbalance, right? These are the things that we want to look for, okay? Daily, downtrend, weekly, downtrend, 4 hour, uptrend, but we're using 4 hour building blocks to find an execution point within the 4 hour building block. Okay, so what do we have within here? 15-minute fair value gap, 15-minute imbalance. Also, hourly order block. Okay, so this whole price range, right? Why do we use our building blocks? Because it's price range that are high confluence for orders to get filled, for price to go in whatever direction we think it's going to go. That's all this is. It's just high probability price ranges, and we're executing off of confirmation. Okay, so
really just gonna be it today. Tomorrow I'll probably watch take profits and stop losses.